All right, let's get right into it. Today we're talking about NIO. And man, there's this incredible battle playing out. On one hand, you've got this super powerful story, this narrative that's just electric. And on the other, you've got the cold hard numbers, the stock chart. So the big question is, which one's gonna win?
And this narrative, it's gotten so strong that some folks out there are actually calling this NIO's Apple moment. I mean, we're even hearing that old label, the Tesla killer, making a serious comeback. It's a huge claim.
But, and this is the big but, does the stock chart actually agree with all this hype? That's the real tension we're going to dig into today. It's the story versus the chart, the narrative versus the numbers. All right, so let's start with the story side of things. And really, it all kicks off with what some sources are calling a government-fueled policy bomb. Yeah, you heard that right. Beijing just dropped this massive new subsidy plan, and it's basically designed to completely shake up the entire EV landscape.
So, what exactly is a policy bomb? Well, think of it like this. It's a huge, super aggressive move by the Chinese government. And their goal? It's crystal clear. They want to absolutely crush the internal combustion engine, and they've set a target of 2026. We're not talking about a little policy change here. This is a massive, nationwide strategic push.
But here's where it gets really interesting. When you read the fine print. This policy, it's not neutral, not at all. It is specifically engineered, almost custom-built, to favor smart EVs that use battery swapping. And who does that sound like? Yep, it plays directly into NIO's hands, right into their core tech.
And that right there, that's the setup for what people are calling NIO's Apple moment. So let's break down how this policy isn't just about selling more cars. It's about changing their entire business model from the ground up. Okay, so how does this work? It all comes down to NIO's Battery as a Service model, or BaaS. It's a brilliant bit of financial engineering. See, most competitors, think Tesla, they sell the car and the battery all in one big chunk. That makes the sticker price really high. But NIO, they do something clever. They lease you the battery separately. By doing that, the upfront price on the sales receipt is way lower, which means their premium cars suddenly qualify for these super generous government subsidies that their competitors just can't touch.
And this is the Apple moment. It's not about the car, it's about the ecosystem. This subsidy advantage creates this incredible recurring revenue flywheel. Just follow the logic. The subsidies drive more sales. More sales mean more cars join their BaaS network. More cars on the network means battery swaps just start happening exponentially. And here's the kicker. Those swaps are a high-margin recurring revenue stream. It's like a subscription. So investors can start looking at NIO not just as a car company, but as a platform company, which is a whole different ballgame when it comes to valuation. And you know what's underpinning all of this? A massive first-mover advantage. Get this, NIO is getting close to 100 million battery swaps. Just let that sink in for a second. That's not just a big number. That's a gigantic proprietary data set. It's an infrastructure moat that competitors can't just go out and build tomorrow. It's a huge, huge advantage. Okay, so that's the story, and you have to admit, it's a fantastic story. But here's the thing about the market. A great story is completely useless if nobody buys it. Literally. So now let's pivot and look at the trader's chart, the antithesis to this whole narrative, and see what the market actually thinks.
And when you look at this chart, wow, it is a total battlefield right now. You've got bulls and bears, and honestly, both sides have a really strong case. The bulls are pointing to a potential breakout. They see momentum indicators like the MACD and RSI turning positive. They're saying the buyers are coming. But then the bears step in and say, hold on a second. They point to the failure at that key resistance and the fact that the price is just stuck under these longer-term moving averages, which is kind of like a price ceiling. It's a classic standoff, a total technical stalemate.
So all this uncertainty has drawn some really clear battle lines in the sand for traders. Let's zoom in and look at the exact price levels that everyone is watching, because these are going to decide the next big move.
Okay, first up for the bulls. The magic number is $5.20. That's the key resistance, the ceiling they have to break through. If they can get a solid, confirmed close above that level, especially with some real volume behind it, that's the signal that the buyers are in control and they are buying the story. And on the flip side, for the bears, their line in the sand is $4.90. That's the critical floor, the support that has to hold. If the price breaks down below that level, it's a huge red flag. It tells you the bullish story is losing steam, and it could be the start of a real move to the downside. So for a trader, the game plan becomes crystal clear, right? You're either playing the breakout or the breakdown. The bulls are waiting to buy on a move above resistance. The bears are waiting to sell on a move below support.
It's a classic tug of war. And in a situation like this, managing your risk, well, that's absolutely everything.
Okay, so how do we bring these two worlds together, the story and the chart? Well, this is where we get to the verdict. The chart, the technicals, you can think of them as a real-time voting machine. Every trade is a vote, telling us whether the market actually believes the big bullish story.
And smart traders, they're not just looking at one thing. They're looking for a whole bunch of signals to line up at once, what they call a confluence of evidence. They need to see that the market really means it. So yeah, they're watching the price at those key levels we talked about, but they're also looking at the trading volume, they're checking momentum indicators, and they're even seeing what the rest of the EV sector is doing. They need to see everything pointing in the same direction.
Now, what makes this whole situation even more fascinating is the timing. There's this idea floating around called the clean slate theory. The thinking is, after all that heavy tax loss selling at the end of December, the only people left holding the stock are the true believers, the diamond hands, right? And here's why. There's a tax rule called the wash sale rule that basically says if you sell for a loss, you can't buy back for 30 days. So all that big institutional money that's sold off, they've been legally stuck on the sidelines, waiting to get back in.
And that is why volume is going to be the ultimate lie detector here. When that 30-day window is up and the big money is allowed to come back into the stock, you better believe everyone will be watching the volume. If we see a breakout on huge volume, that's your signal. That means the institutions are back and they're buying the story. But if the price tries to move up on really low, dry volume, that's a bad sign. It means there's no conviction and the rally probably doesn't have legs.
And really, this whole setup boils down to one powerful contrarian idea. And this quote from one of the sources just nails it. The market has priced in all the old bad news, but has not caught up with the government-mandated upside. What that's basically saying is, the chart is looking in the rearview mirror, while a fundamental game-changing shift is happening right now.
So that brings us right back to where we started. We have this incredible story. Is it powerful enough to actually rewrite the stock chart? Or is the chart, are the hard numbers, going to have the final say? The battle lines are drawn, folks. 520 on the upside, 490 on the downside. Now we just have to watch and see which story wins.